Do you agree with Doug McMillon over at Walmart and Brian Cornell over at Target about trying to absorb those costs? I believe some people call it investing in prices.
I think they're absolutely on the right track. There's no question there's an enormous inflationary pressure on the cost structure. The supply chain is a separate issue, but it has its own cost dynamics as well. What they're taking, I think, is a very sensible approach to allow for some EBIT margin compression while they maintain their value proposition to the consumer. That's the essence of those businesses' appeal to the consumer, and to sacrifice that position means sacrificing long-term health of the business.
Arthur, I wonder, when you take a stance like that, I mean, folks like McMillan and Cornell, they are very bright people. They know their industries very well. Is there maybe an implication, right, that these CEOs feel as though the inflationary environment will ease in the coming months and quarters, and that's the reason why they feel comfortable taking those margin hits? Is it a short-term thing in your mind?
Yeah, I think you have to pull apart the inflation numbers to get at an understanding of how they think about things. If you look at the inflation numbers being driven by food and energy in particular, the underlying inflation in goods and services is nothing like the headline numbers we see in the newspaper. And I think they're looking out over a good 12 to 24 months to see moderation in the print that says inflation is up by a certain amount, when underlying inflation that they can do something about is not nearly as bad.
So if that's the case, why are there only retailers the size of Walmart, Target, maybe Costco and big box companies? Are they the only ones who can really take that kind of a strategy because they can afford, they can have the balance sheet to take those margin pressures over the next 12 to 24 months? What happens to smaller specialty retailers?
Well, I think you're right on. The big guys are showing that giants can dance. What they've done with supply chain management and inventory build in ways that they've never done before allows them to take the high ground here. They've rethought their supply chain, for example, end to end, and done some things that they would never have considered 2 to 4 years ago, like chartering their own ocean freighters. Only the big guys can do that and think from end to end, concept to consumer. The smaller people are, in a sense, prisoners of the supply chain that they have created and don't have the same leverage to opt out of what they have into a new configuration.
What parts of the retail spectrum, in your mind, are the most favorable, have the most tailwinds in the coming year? Do you feel as though, from a value perspective, it's the dollar store side of things, or is it luxury? Is it specialty retail? Is it big box? Where would you be hypothetically seeing the most bullish outlook for retailers?
Well, I still believe the off-pricers, led by TJX, have a really sound position with the consumer and run a wonderful business model. I'd also, in the short term, bet on the big boys. As you've said, the Targets, the Walmarts, the Home Depots, the Lowe's, the Costco's have demonstrated an agility in this terrible period of time of the pandemic that has earned them the respect, and I hope the investment from institutions that they deserve. The people in the middle are stuck a little bit. As I said, stuck with the supply chain, stuck with the transition from bricks and mortar retail to online retail, some of whom are having difficulty managing that change, where things are happening to them rather than them making things happen.
And Arthur, before we let you go, we've made a lot in business news and business media, for sure, about the health of the American consumer, the deleveraging of the consumer, the solid position that they are in relative to where they have been in the last couple of decades. Do you believe in your mind that the American consumer is as healthy as all the news reports claim?
I think we have a bubble here of good health. We have accumulated savings from all the stimulus and unemployment activity that went on over the past 12 months. A lot of that is pouring out of consumers' wallets into the results you're seeing for the third quarter. Double-digit comp store increases for some of the biggest and best retailers. I think that is going to moderate. I think a lot of demand has been pulled forward from the fourth quarter into the third quarter. I think holiday will actually be a bit more muted than many people are saying right now. There's a lot of fear of missing out on the part of consumers that goods won't be there. And so I think they're moving early, and the last 30 days of the run up to Christmas may be more muted than we've had expectations for.